Question 1. Which of the following is an essential element required for an insurance contract to be legally binding? A. Offer and acceptance. B. Full payment of premiums before policy issuance. C. Mutual benefit from the contract. D. Agreement of insurance agents to the terms. Answer A. Offer and acceptance. Explanation: for an insurance contract to be legally binding, certain elements must be present, including offer and acceptance. This principle ensures that one party, the applicant, makes an offer to purchase insurance, and the other party, the insurer, accepts it, forming a valid contract. Option B is incorrect because the full payment of premiums is not always required before a policy is issued. The agreement may specify different payment terms. G. Payment in installments. Option C is incorrect because a mutual benefit is not a strict requirement in the legal sense. Instead, the presence of offer and acceptance and consideration, the exchange of value, are essential. Option D is incorrect because the insurance agent's agreement to terms does not form the contract itself. The parties involved are the insurer and the insured. Question 2. In Wyoming, which of the following is not a duty of an insurance producer in the handling of client claims? A. Disclose all material facts to the client regarding the policy coverage. B. Provide legal advice to clients regarding insurance claims. C. Submit all claims within the required time frame. D. Maintain proper documentation of all transactions related to the claim. Answer B. Provide legal advice to clients regarding insurance claims. Explanation: an insurance producer has several duties toward clients, such as disclosing material facts, submitting claims promptly, and maintaining accurate records. However, providing legal advice is not within the scope of an insurance producer's responsibilities. Option A is correct because producers must disclose all material facts, including coverage details, exclusions, and limitations. Option C is correct because insurance producers must ensure claims are submitted in accordance with the insurer's guidelines and within any required timelines. Option D is correct because keeping proper documentation ensures that the producer is compliant with record-keeping regulations and can provide proof of claims handling if needed. Option B is incorrect because offering legal advice is the role of licensed attorney, not an insurance producer. Producers can only provide information related to insurance products but cannot give legal counsel regarding claims. Question 3 scenario. Mr. Williams, a producer in Wyoming, has just signed a new client for a health insurance policy. During the enrollment meeting, the client discloses that he has a pre-existing condition that might affect his eligibility for certain coverage under the policy. What should Mr. Williams do in this situation? A. Inform the client that the pre-existing condition will automatically be covered under the policy. B. Advise the client to leave the information out to ensure they get the policy issued faster. C. Disclose the pre-existing condition to the insurer and ensure that the client is aware of how it affects coverage. D. Ignore the pre-existing condition since it is not required to be disclosed under Wyoming law. Answer C. Disclose the pre-existing condition to the insurer and ensure that the client is aware of how it affects coverage. Explanation: in Wyoming, insurance producers are required to fully disclose material information, including pre-existing conditions, to the insurer. Option C is correct because failure to disclose relevant health information, such as a pre-existing condition, could lead to the policy being voided or claims being denied. The producer must inform the client of how this condition might affect eligibility or policy provisions, such as waiting periods or exclusions. Option A is incorrect because a pre-existing condition may not be automatically covered and can affect the terms of the policy, such as exclusions or waiting periods. Option B is incorrect because advising the client to withhold material information is unethical and could result in fraud charges. Option D is incorrect because failing to disclose a pre-existing condition could violate insurance regulations and lead to legal consequences, including fines or license suspension for the producer. Question 4. Which of the following is a key difference between term life insurance and whole life insurance? A. Whole life insurance offers coverage for a specific period, while term life insurance offers coverage for the entire lifetime of the insured. B. Term life insurance provides a death benefit, but no cash value is accumulated, while whole life insurance builds cash value over time. C. Whole life insurance premiums decrease as the insured ages, while term life premiums remain fixed. D. Term life insurance is typically issued for individuals over the age of 60, while whole life insurance is generally issued for younger individuals. Answer B. Term life insurance provides a death benefit, but no cash value is accumulated, while whole life insurance builds cash value over time. Explanation: option B is correct because term life insurance provides coverage for A specified period, e.g., 10, 20, or 30 years, and only pays a death benefit if the insured dies during the term. It does not accumulate cash value. Whole life insurance, on the other hand, provides lifetime coverage and includes a savings component that builds cash value over time, which the policyholder can borrow against or withdraw. Option A is incorrect because whole life insurance provides lifelong coverage, not just for a specific period. Option C is incorrect because whole life insurance premiums typically remain level throughout the insured's life, whereas term life premiums may increase over time or remain level depending on the policy type. Option D is incorrect because term life insurance can be issued to individuals of various ages, while whole life insurance is available to individuals of all ages, not just younger ones. Question 5. Which of the following statements about the Wyoming Department of Insurance is correct? A. The Wyoming Department of Insurance is responsible for creating insurance policies that insurers must sell to residents of Wyoming. B. The Wyoming Department of Insurance regulates insurance premium rates but does not have authority over the licensing of producers. C. The Wyoming Department of Insurance enforces insurance laws and ensures that producers and insurers comply with state regulations. D. The Wyoming Department of Insurance only regulates life insurance policies and is not involved with other types of insurance. Answer: C. The Wyoming Department of Insurance enforces insurance laws and ensures that producers and insurers comply with state regulations. Explanation: the Wyoming Department of Insurance is responsible for enforcing state insurance laws, ensuring that producers, insurers, and policies comply with Wyoming regulations. This includes licensing producers, approving insurance products, and ensuring ethical conduct in the industry. Option A is incorrect because the EER does not create insurance policies. Instead, it regulates insurers and ensures they comply with state law. Option B is incorrect because the EER has authority over both licensing of producers and insurance premium rates, ensuring compliance with laws related to both areas. Option D is incorrect because the EER regulates a broad range of insurance products, including life, health, property, and casualty insurance, not just life insurance. Question 6. Which of the following is true regarding the underwriting process in Wyoming? A. The underwriter's main goal is to maximize the insurer's exposure to risk. B. An applicant's credit score is typically not considered in the underwriting process in Wyoming. C. The underwriting process evaluates an applicant's risk and determines the appropriate premium rates. D. Underwriters have the authority to approve or reject insurance policies without consulting the insurer. Answer: C. The underwriting process evaluates an applicant's risk and determines the appropriate premium rates. Explanation: underwriting involves evaluating the risk of insuring an applicant and determining the appropriate premium rates based on that risk. This process helps ensure that the insurer can manage risk and remain financially viable. Option A is incorrect because the underwriter's goal is to minimize risk exposure, not maximize it. Option B is incorrect because credit scores are often considered during underwriting, especially for property and casualty policies, as they can be indicative of risk levels. Option D is incorrect because underwriters typically consult with the insurer before making decisions, if they do not have absolute authority to approve or reject policies on their own. Question 7 scenario. MS Roberts, a producer in Wyoming, is meeting with a client who has just purchased an auto insurance policy. During the meeting, the client asks her if their coverage includes personal injury protection, PIP. MS Roberts reviews the policy but realizes that PIP is not included in the policy and the client did not request it during the application process. What should MS Roberts do in this situation? A. Inform the client that PIP coverage is typically unnecessary and reassure them that the policy provides sufficient protection. B. Advise the client that they must submit a new application to add PIP coverage as it cannot be added to an existing policy. C. Explain to the client that PIP coverage was not included, but offer to amend the policy and add PIP coverage if they want it. D. Ignore the client's question since it is the client's responsibility to know what is included in the policy. Answer: C. Explain to the client that PIP coverage was not included, but offer to amend the policy and add PIP coverage if they want it. Explanation: as an insurance producer, MS Roberts has an ethical responsibility to inform the client about the coverage included in their policy and offer amendments or additional coverage when necessary. Option A is incorrect because downplaying the importance of PIP coverage could be seen as misleading the client and failing to fulfill the producer's duty of providing transparent information. Option B is incorrect because pet coverage can often be added to an existing policy, so new application may not be necessary. Option D is incorrect because it is the producer's duty to explain policy details and help the client understand what is and isn't covered. Question 8. Which of the following is true about the fiduciary responsibilities of an insurance producer in Wyoming? A. A producer must only act in the best interest of the insurer, not the client, when handling premiums and commissions. B. A producer must ensure that all premiums collected are promptly sent to the insurer without any unauthorized deductions. C. A producer may use premiums to pay their personal expenses as long as the client is not harmed. D. A producer is not obligated to disclose any potential conflicts of interest to the client. Answer: B. A producer must ensure that all premiums collected are promptly sent to the insurer without any unauthorized deductions. Explanation: as fiduciaries, insurance producers must act in the best interests of their clients, manage premiums and commissions responsibly, and ensure proper handling of funds. Option A is incorrect because the producer has a dual responsibility to both the insurer and the client, ensuring that the client's needs are met while also fulfilling the terms of the policy with the insurer. Option C is incorrect because using premiums for personal expenses would constitute misappropriation of funds, which is unethical and illegal. Option D is incorrect because producer is required to disclose any conflicts of interest to the client, ensuring transparency in the relationship. Question 9. Which of the following best describes the role of an adjuster in the insurance claims process? A. The adjuster is responsible for denying claims and ensuring that only a minimal payout is made. B. The adjuster evaluates the circumstances of a claim, determines liability, and recommends a fair settlement. C. The adjuster provides legal counsel to clients regarding the best course of action after an accident. D. The adjuster is responsible for collecting premiums from clients and ensuring policies are up to date. Answer: B. The adjuster evaluates the circumstances of a claim, determines liability, and recommends a fair settlement. Explanation: an adjuster's primary role is to evaluate the claim, investigate the circumstances, and determine the insurer's liability for the claim. They may recommend settlement based on the findings of their investigation. Option A is incorrect because the adjuster's goal is to ensure that the claim is processed fairly, not to minimize payouts. Option C is incorrect because providing legal counsel is the role of an attorney, not an adjuster. Option D is incorrect because the responsibility of collecting premiums typically falls to the insurance producer, not the adjuster. Question 10. What is the most significant factor that affects the premium rates for property and casualty insurance policies in Wyoming? A. The client's income level and assets. B. The insurance company's claims experience and loss ratios. C. The client's personal preferences for coverage options. D. The geographical location and environmental risks of the insured property. Answer: B. The insurance company's claims experience and loss ratios. Explanation: loss ratios in an insurance company's claims experience are key factors that directly influence premium rates. Insurers use this data to assess risk and adjust premiums accordingly. Option A is incorrect because, although income and assets might be considered for underwriting purposes, they are not the most significant factors in setting premium rates for property and casualty insurance. Option C is incorrect because although clients' preferences for coverage may affect the specific policy terms, they do not typically determine premium rates. Option D is incorrect because although geographical location and environmental risks can affect specific types of coverage, e.g. flood insurance, they are not the most significant factor in determining premium rates for the broader property and casualty insurance industry. Question 11. Which of the following is a characteristic of a claims-made policy? A. The policy covers claims made during the policy period, regardless of when the incident occurred. B. The policy only covers claims for incidents that occurred within the policy period. C. The policy covers claims as long as the incident occurred during the policy period, but the claim can be made after the period ends. D. The policy excludes coverage for incidents that happen after the policy period ends, even if the claim is made during the policy period. Answer: C. The policy covers claims as long as the incident occurred during the policy period, but the claim can be made after the period ends. Explanation: a claims-made policy provides coverage for claims made during the policy period, even if the incident that led to the claim occurred before the policy period started, as long as the claim is filed while the policy is active. Option A is incorrect because the claim must be made during the policy period to be covered. Option B is incorrect because claims-made policies cover claims made during the policy period, but the incident itself may have happened earlier. Option D is incorrect because Claims can be made after the policy ends if the event occurred while the policy was active. Question 12. Which of the following situations is covered under a standard homeowner's insurance policy? A. Intentional damage caused by the homeowner to their own property. B. Neighbor's tree falls on the homeowner's house during windstorm. C. Injuries sustained by the homeowner while working on home renovation project. D. Damage caused by the homeowner's pet to visitor's property. Answer: B. A neighbor's tree falls on the homeowner's house during windstorm. Explanation: Standard homeowners policy typically covers windstorm damage to the structure, including damage from falling trees or debris caused by such events. Option A is incorrect because intentional damage is excluded from coverage. Option C is incorrect because injuries sustained during home renovation projects are generally covered under workers' compensation, not homeowners insurance. Option D is incorrect because damage caused by the homeowner's pet would likely fall under liability coverage, but homeowners insurance typically does not cover pet-related damage to third-party property unless specified. Question 13. Which of the following is the purpose of an insurance endorsement? A. To reduce the premium amount of a policy. B. To add, modify, or exclude coverage within an insurance policy. C. To provide additional coverage only for high-risk clients. D. To automatically renew a policy for the next term. Correct answer: B. To add, modify, or exclude coverage within an insurance policy. Explanation: An endorsement, also known as a rider, is used to modify the terms of an insurance policy either by adding new coverage, modifying existing coverage, or excluding certain coverage. Option A is incorrect because endorsements can add or modify coverage, not reduce premiums. Option C is incorrect because endorsements apply to any policyholder, not just high-risk clients. Option D is incorrect because endorsements do not deal with policy renewal, which is handled separately. Question 14. What does the term underwriting refer to in the insurance industry? A. The process of determining the eligibility of an insurance company to sell policies. B. The process of evaluating and determining the risks involved with insuring an individual or property. C. The process of calculating the insurance premiums for each policyholder. D. The process of paying claims to policyholders based on their coverage. Answer: B. The process of evaluating and determining the risks involved with insuring an individual or property. Explanation: Underwriting is the process in which an insurer evaluates the risks associated with insuring an individual or property and determines the terms, conditions, and premiums for the policy. Option A is incorrect because underwriting is not related to the eligibility of the insurer but to the assessment of risks related to the insured. Option C is incorrect because premium calculations are a part of underwriting, but underwriting involves more than just premium calculation. It assesses risk. Option D is incorrect because claims payments are separate from the underwriting process and involve evaluating the circumstances of loss. Question 15. Which of the following is true regarding the liability coverage under a homeowner's policy? A. It only covers injuries caused by the homeowner's actions inside their own home. B. It covers injuries caused by the homeowner's negligence both inside and outside the home. C. It covers only damages to the homeowner's property. D. It is optional and must be specifically purchased by the homeowner. Answer: B. It covers injuries caused by the homeowner's negligence both inside and outside the home. Explanation: Liability coverage in homeowner's policy protects the homeowner from financial responsibility if someone is injured or their property is damaged as a result of the homeowner's negligence both inside and outside the home. Option A is incorrect because liability coverage extends beyond just injuries inside the home. Option C is incorrect because liability coverage does not cover damages to the homeowner's own property. It covers others' property or injury caused by the homeowner. Option D is incorrect because liability coverage is typically included in standard homeowners policy, though additional limits may be added. Question 16. Which of the following statements about flood insurance is correct? A. Flood insurance is automatically included in all standard homeowners policies. B. Flood insurance is only available through the National Flood Insurance Program and FIP. C. Flood insurance covers any water damage to the property regardless of the source. D. Homeowners can purchase flood insurance as an endorsement to the homeowner's policy. Answer: B. Flood insurance is only available through the National Flood Insurance Program and FIP. Explanation: Flood insurance is not typically included in standard homeowners policies and is available primarily through the National Flood Insurance Program and FIP, a government-backed program. Option A is incorrect because flood insurance is not automatically included in homeowners policies. Option C is incorrect because flood insurance specifically covers flood damage, e.g., rising water, not all types of water damage. Option D is incorrect because flood insurance is generally purchased separately from a homeowner's policy, not as an endorsement. Question 17. Which of the following types of coverage is not typically included in a standard auto insurance policy? A. Liability coverage. B. Comprehensive coverage. C. Uninsured motorist coverage. D. Pet injury coverage. Answer: D. Pet injury coverage. Explanation: pet injury coverage is not typically included in a standard auto insurance policy. Most auto insurance policies provide coverage for damages to the vehicle, liability, and medical payments, but pet injury is not a standard inclusion. Option A is incorrect because liability coverage is a fundamental part of any auto insurance policy. Option B is incorrect because comprehensive coverage is typically included to cover non-collision related damages to the vehicle. Option C is incorrect because uninsured motorist coverage is often included to protect against accidents with uninsured drivers. Question 18. Which of the following is a common characteristic of group health insurance policies? A. Premiums are usually higher than individual health insurance policies. B. Group health insurance coverage is typically available to individuals who do not meet the eligibility criteria for individual insurance. C. Premiums are based on the health status of each individual within the group. D. Group health insurance policies are usually underwritten based on the individual's medical history. Answer: B. Group health insurance coverage is typically available to individuals who do not meet the eligibility criteria for individual insurance. Explanation: Group health insurance policies are generally offered to employees, associations, or groups and are often available to individuals who might not qualify for individual health insurance due to pre-existing conditions or other factors. Option A is incorrect because group health insurance generally has lower premiums compared to individual insurance. Option C is incorrect because group health insurance premiums are typically based on the group as a whole, not on the individual's health status. Option D is incorrect because group health insurance is usually not underwritten based on individual medical history, which helps make coverage available to more people. Question 19. Which of the following types of insurance policies is designed to provide coverage for a business against the loss of income due to a covered event? A. Business owner's policy, BOP. B. Commercial general liability (CGL) insurance. C. Workers' compensation insurance. D. Business interruption insurance. Answer: D. Business interruption insurance. Explanation: business interruption insurance is designed to cover lost income and operating expenses when a business cannot function due to a covered event, such as a fire or natural disaster. Option A is incorrect because a business owner's policy BOP includes general liability and property coverage but does not focus solely on income loss. Option B is incorrect because commercial general liability (CGL) insurance covers liability for third-party injury or property damage, not business income loss. Option C is incorrect because workers' compensation insurance covers employees' medical expenses and lost wages, not income loss for the business. Question 20. Which of the following best describes exclusion in an insurance policy? A. Exclusion refers to the list of risks or perils covered by the policy. B. Exclusion refers to specific risks or perils that are not covered by the policy. C. Exclusion refers to the portion of the premium paid for optional coverage. D. Exclusion refers to the period during which a policyholder can file a claim. Answer: B. Exclusion refers to specific risks or perils that are not covered by the policy. Explanation: exclusions in an insurance policy are risks or perils that are not covered under the terms of the policy. These are explicitly listed in the policy to avoid confusion and clarify the scope of coverage. Option A is incorrect because exclusions are about what is not covered, not what is covered. Option C is incorrect because exclusions are not related to the premium, but to the scope of coverage. Option D is incorrect because exclusions are not related to the timing of a claim, but to the types of risks excluded from coverage. Question 21. Which of the following is true regarding a deductible in an insurance policy? A is the amount the insurance company will pay for a claim before the policyholder is responsible. B, it is the amount the policyholder must pay out of pocket before the insurance company pays for a claim. C, it applies only to claims that are filed during the first year of the policy. D, it is always a percentage of the total coverage amount. Answer: B, it is the amount the policyholder must pay out of pocket before the insurance company pays for a claim. Explanation: A deductible is the amount the policyholder must pay for a claim before the insurance coverage kicks in. The deductible amount is subtracted from the total claim amount before the insurer pays the remainder. Option A is incorrect because the deductible is paid by the policyholder, not the insurer. Option C is incorrect because deductibles apply to all claims, not just those filed in the first year. Option D is incorrect because the deductible is typically a fixed amount, not a percentage of coverage. Question 22. Which of the following is not typically covered by a standard homeowner's insurance policy? A. Fire damage to the home. B. Theft of personal property. C. Flood damage to the home. D. Liability for injuries that occur on the property. Answer: C. Flood damage to the home. Explanation: a standard homeowner's insurance policy typically does not cover flood damage. Homeowners must purchase separate flood insurance for this type of coverage. Option A is incorrect because fire damage is generally covered. Option B is incorrect because theft of personal property is covered in a typical homeowner's policy. Option D is incorrect because liability for injuries on the property is included in the standard policy. Question 23. Which of the following is a characteristic of an umbrella insurance policy? A. It provides additional liability coverage over and above standard home or auto insurance. B. It is only applicable for businesses and does not cover individuals. C. It provides coverage for health-related expenses. D. It covers the policyholder's own property against damage. Answer A. It provides additional liability coverage over and above standard home or auto insurance. Explanation: an umbrella policy is an extra layer of liability insurance that provides coverage above and beyond the limits of a homeowner's auto or other personal insurance policies. It helps protect against large claims that exceed the coverage limits of those policies. Option B is incorrect because umbrella policies are available to individuals as well as businesses. Option C is incorrect because umbrella insurance does not cover health-related expenses. Option D is incorrect because umbrella policies do not cover damage to the policyholder's property. They cover liability. Question 24. Which of the following is covered under collision coverage in an auto insurance policy? A. Damage to your vehicle from a falling tree. B. Damage to your vehicle from a hit-and-run accident. C. Damage to your vehicle due to a natural disaster. D. Medical bills for injuries caused in an accident. Answer: B. Damage to your vehicle from a hit-and-run accident. Explanation: collision coverage helps pay for damage to the policyholder's vehicle after collision with another vehicle or object, regardless of who is at fault. Option A is incorrect because damage from falling tree is typically covered by comprehensive insurance, not collision. Option C is incorrect because damage from natural disaster is typically covered by comprehensive insurance. Option D is incorrect because medical bills for injuries are generally covered by personal injury protection (PIP) or medical payments coverage, not collision insurance. Question 25. Which of the following would be considered a breach of contract in an insurance agreement? A. Failing to report an accident within the required time frame. B. Paying premiums on time. C. The insurance company raising premiums after a claim. D. Cancelling a policy when it's no longer needed. Answer A. Failing to report an accident within the required time frame. Explanation: a breach of contract in insurance occurs when either party fails to meet the terms set forth in the policy. Failing to report an accident within the required time frame is typically a violation of the policy's terms. Option B is incorrect because paying premiums on time is not a breach of contract. Option C is incorrect because an insurance company can raise premiums under certain conditions as outlined in the policy. Option D is incorrect because the cancellation of a policy when no longer needed is not a breach provided it follows the terms of the agreement. Question 26. Which of the following types of life insurance provides coverage for a specified period of time, such as 20 years? A. Whole life insurance. B. Universal life insurance. C. Term life insurance. D. Variable life insurance. Answer: C. Term life insurance. Explanation: term life insurance provides coverage for a specified period or term such as 10, 20, or 30 years. If the insured dies within the term, the beneficiaries receive the death benefit. Option A is incorrect because whole life insurance provides coverage for the lifetime of the insured. Option B is incorrect because universal life insurance is permanent insurance with flexible premiums and death benefits. Option D is incorrect because variable life insurance is permanent insurance with investment options, not term-based. Question 27. Which of the following best defines subrogation in the context of insurance? A. The process of cancelling a policy before the end of the coverage period. B. The insurer's right to recover costs from third party responsible for loss. C. The process of determining the policyholder's premium rates. D. The process of filing claim for coverage under an insurance policy. Answer. B. The insurer's right to recover costs from third party responsible for loss. Explanation. Subrogation allows an insurer to recover the amount it paid to the policyholder for loss from third party that is legally responsible for the damage. Option A is incorrect because subrogation is not related to policy cancellation. Option C is incorrect because premium determination is part of the underwriting process, not subrogation. Option D is incorrect because filing claim is not subrogation. Question 28. Which of the following best describes a mutual insurance company? A. A company owned by shareholders who profit from its operations. B. A company that provides insurance only to government entities. C. A company owned by policyholders who share in the company's profits or losses. D. Company that only offers group health insurance policies. Answer. C. A company owned by policyholders who share in the company's profits or losses. Explanation. Mutual insurance company is owned by its policyholders. Any profits generated by the company are typically returned to policyholders in the form of dividends or reduced premiums. Option A is incorrect because that describes stock insurance company, not mutual one. Option B is incorrect because mutual insurance companies provide coverage to the public, not just government entities. Option D is incorrect because mutual insurance companies can offer various types of insurance, not just group health. Question 29. What type of insurance policy would most likely be used to cover a business's liability for accidents that occur on its premises? A. Commercial general liability (CGL) insurance. B. Business interruption insurance. C. Commercial property insurance. D. Workers' compensation insurance. Answer A. Commercial general liability (CGL) insurance. Explanation. Commercial general liability (CGL) insurance provides coverage for a business's liability in cases of accidents or injuries that occur on its premises. It covers bodily injury, property damage, and other liabilities related to the business's operations. Option B is incorrect because business interruption insurance covers income loss due to covered events, not liability. Option C is incorrect because commercial property insurance covers damage to the business's property, not liability for accidents. Option D is incorrect because workers' compensation covers employee injuries, not accidents involving customers or visitors. Question 30. Which of the following types of insurance would best cover the costs of repairing or replacing a business's equipment after a natural disaster? A. Business interruption insurance. B. Commercial property insurance. C. Professional liability insurance. D. Workers' compensation insurance. Answer. B. Commercial property insurance. Explanation. Commercial property insurance covers damage to a business's physical assets, including equipment, buildings, and inventory caused by covered events such as natural disasters. Option A is incorrect because business interruption insurance covers income loss due to disasters, not property damage. Option C is incorrect because professional liability insurance covers professional errors or negligence, not property damage. Option D is incorrect because workers' compensation insurance covers employee injuries, not equipment damage.